We are back with my guest host, Rob Tetrault. He's a portfolio manager at National Bank Financial. He's based in Winnipeg, but he's been with us all morning long here in Toronto this morning. And I want to get your thoughts on the U.S. stock market, because for the first time in a while, you've trimmed your exposure to U.S. stocks. And for the first time, perhaps ever, you're now sitting on a fairly significant pile of cash. Why?
Yeah, I don't know if I'd say significant, but there's certainly some cash. So what we do prudent rebalancing. I was on here in February at the bottom in 2016, and I told everyone, you got to be buying right now. When the market corrects, you got to be buying, and we were advocating that for our clients, trimming the fixed income portion in our portfolios and adding equity. And I'd be a hypocrite if I didn't do the opposite, right? So now markets have been rallying, hitting all-time highs significantly. We haven't seen, excuse me, we haven't seen a 5% correction in like 12 months. So what I'm saying is I wanted to rebalance. I want to get partly out of cash, out of U.S. equities. And normally I would rotate that to fixed income. But given where we're at with fixed income, do I want to make 2.5% in corporates while I wait and get the exposure to a potential downside? No, I'd rather get 1% of my cash and then just wait. And if the market does correct, we'll be ready to deploy. And
what are your thoughts on the Canadian market? When you decided to take down equity exposure, you chose the U.S. side of your portfolio. What are your thoughts on stocks here in Canada?
We were overweight U.S. for a while and have been global in U.S., and we've been underweight Canada. The TSX has barely moved in 3 years, so I'm slightly bullish. I think energy will move it. It'll move the needle for sure. So when and if we do redeploy, it'll be Canadian equities.
That rally that we're looking at right now, that we saw rather in the one-year graph, you can't really see it on that 5-year graph, but that rally that has taken place since September, that's largely been a bank rally here in Canada. Will other stocks catch up? Will the energy stocks catch up?
I've said it before and I'm saying it again. I think they will catch up. I think the energy stocks will have to catch up to the price of crude.
Which energy stocks would you position yourself in, waiting for that alignment between corporate share price multiples and the price of West Texas Intermediate crude?
Whenever we do some sort of move on a pure sector basis, I like to stick to the large caps. Those will move first, and they're more defensive. I often preach defensive equities, defensive strategies and portfolios. I like Suncor. We talked about Cenovus. Any of the large caps that are profitable right now would be names that I would suggest.
What kind of weighting do you have in Canadian banks right now?
I was very, very bullish on Canadian banks. I've been on this show multiple times preaching that there was 2 months ago I was on here saying that there was a ton of upside left in Canadian banks. That was like 8% ago on the banks. We're slightly overweight. Again, we continue to be overweight. I don't think the multiples are that out of whack yet. We're getting to the point where they might be close to above what I would consider normal norms for now, but slightly overweight.
Rob Tetrault, thank you a great deal for joining us all program long tonight. Enjoy your time in Toronto with safe journeys back to Winnipeg.
Thanks, Paul.
That is Rob Tetrault. We thank him for joining us on the final day of the week. We thank you for watching, of course, as well. Have a great week.